Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention another fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate ourselves through this upside-down, topsy-turvy world to come out, hopefully, in greener pastures on the other side, healthier, wealthier, and wiser. That's the goal, trying to build our best lives. And in order to do that, we have to look at the economics, political situation, and navigate how best to invest, stay healthy, and other things as well. So today we're going to take a look to some updates around the economy, specifically related to the pandemic. Then we're also going to take a look at some good news about Bitcoin, and should everyone have a little bit of Bitcoin in their portfolio? We'll take a look at that, see what some of the reports are suggesting. A hint, yes is the answer. Too long didn't read, there you go. All right, just quick little updates here. Coronavirus live updates. Israel reportedly heads for a second nationwide lockdown, and Heathrow reports 81.5% drop in travelers. And of course, folks, as we get into the fall season here, the kids are back at school, and this is when we start looking in the next few months for the second wave, and I don't believe we have seen it yet. Here's the US coronavirus cases, and this might look like a second wave, but this is not, in my opinion. This is still part of that ongoing first wave that just built up steam because of the tremors within the political establishment, basically like a tsunami, which caused a mishandled pandemic approach, in my opinion. And so this is why this first wave has escalated. I'll show you what a second wave looks like. Here's an example. This is from the influenza pandemic, the 1918-1919 Spanish flu. And this is where we are, folks. This is the little first wave, and you can see it can increase slightly here depending on how you've locked it down. And this here is the second wave, which is, according to this chart, about 3 times larger than the first wave here, the little blip. So there you go. Just be wary. You can read this article if you want, but we are heading for a second wave, and this is not it. You can see global cases currently at 28.2 million. Global deaths at least 910,000. Of course, these are underreported, I would probably say by 20 or 30%. Not maliciously, of course, but some studies have suggested, sociology or epidemiological studies have suggested that if you take the perhaps historic death rate during a month and compare it to this year's month, you will notice that there is a surplus of deaths that are not explained by the official COVID-19 death rates, right? So you subtract the ongoing death rate as you would expect, and then the current death rates, and you subtract from that figure, I should say, the COVID-19 deaths, and you'll find that you have a number that is slightly higher by 20 to 30% generally than what is being expected outside of a pandemic. So there's arguably more COVID deaths than are being acknowledged or reported. And the United States at least at 191,000, and as things continue by the end of this whole thing, we could be up at over 500,000 potentially. So let's go on to a little bit of good news. It's related to Bitcoin. Bitcoin rallies as CNBC's Jim Cramer plans to invest, allegedly. Of course, Jim Cramer is a man who talks out of both sides of his mouth, but he is an entertainer, so that's to be expected. So I don't particularly put not a large cachet into this, but it is still good news nonetheless. Bitcoin's price rose Thursday after Anthony Pompliano announced CNBC's Jim Cramer has been convinced to invest in BTC, Bitcoin, right? The CNBC Mad Money host is the latest high-profile investor to jump on the currency bandwagon. Cramer's relationship with Bitcoin has been quite erratic, once claiming the price could hit 1 million in 2017. The CNBC talking head has also been critical, calling Bitcoin an outlaw currency. And of course, we discussed that yesterday, that in fact cash is used most often for laundering money and for illicit purposes, more so than Bitcoin. But of course, this is the zeitgeist within the culture that we're trying to overcome, right? And to get it embraced. So this is definitely good news that folks like Jim Cramer are coming around to the benefits of Bitcoin. And this is thanks to Anthony Pompliano, who's a huge Bitcoin fan. I don't want to call him a Bitcoin maximalist, but I think he pretty much only has a Bitcoin. And that's honestly the sort of the direction I'm trending. I think there's a lot of opportunity for trading some of the alternate coins, but if you want to be in this for a long term, I think the best approach is to have at least 80%, if not all, of your cryptocurrency portion in Bitcoin itself. Here's, and of course, here he's talking about the Baron of Bitcoin and Dave Portnoy, who dropped in and out. Dave Portnoy is also another entertainer. I don't particularly pay much attention to that. It's just noise, in my opinion. But here we go. Small weightings of Bitcoin have an outsized positive impact on risk-adjusted returns and diversification relative to other alternative assets. Bitcoin's lack of correlation to other assets makes it a useful alternative asset that can help reduce exposure to economic cycles. So we'll be looking at a little bit more of that as I hinted at in the beginning. Should anyone or everyone have a little bit of Bitcoin in their portfolio? And we'll see. Currently, between 10 and 14% of Americans are believed to own Bitcoin. And this honestly is higher than I was expecting. I thought we'd be in single digits, probably low single digits, but it's good news. It's still early days. We're still part of the early uptakers, if you will. And Pompliano will be hoping that the charismatic fund manager can help bump that by a few points. And I'm sure he can. Have the bigger whales or the bigger interest we get in Bitcoin from folks who have a platform and a following, of course, the better and more widely known Bitcoin will become. As it is with veganism, veganism is slowly coming into its own this year. It's been a big rise of it. As you know, I've been vegan over 30 years, and of course, it takes roughly, I think people say, 7 times to hear about a different aspect or a different asset class or a different approach to lifestyle before it sort of becomes considered not mainstream in the sense that the mainstream is uptaking it, has taken it up, I should say, but that it has become sort of part of the social fabric, if you will. And so this is good news. And slowly people are starting to hear about Bitcoin. Bitcoin's role in an investment portfolio. We're going to have a look at a few different articles here related to this. And they all say the same thing, basically, that any amount of Bitcoin, even 1%, enhances a portfolio's return over a medium term. Because I think most of these have only been going back historically and valuing Bitcoin for about the last 5 years, which, as you'll see, is because of the amount of time that Bitcoin's been available in exchange-traded products, right? Conventional wisdom is that Bitcoin has had great returns, but it does that by adding substantial risk, i.e. volatility, to a traditional equity bond portfolio. However, research has found that small weightings of Bitcoin have an outsized positive impact on risk-adjusted returns and diversification relative to other alternative assets. And Bitcoin's lack of correlation to other assets makes it a useful alternative asset that can help reduce exposure to economic cycles. Quarterly adjustments or rebalancing of Bitcoin back to the original weight in the portfolio can help limit volatility and enhance returns. So in other words, if you decide to have just for make it easy, have 5% of your portfolio in Bitcoin, let's say you have a $100,000 portfolio and you put 5,000 into Bitcoin, which would buy you roughly just under half a Bitcoin, then if Bitcoin goes up in value more so than the rest of your portfolio, so in other words, that 5% of Bitcoin now is perhaps worth 10% of your portfolio, and let's say your portfolio is now worth $150,000, then you would sell, half of your Bitcoin in order to bring that percentage from 10% back down to 5%. So that's basically what rebalancing is talking about here. Here they tell you a little bit of how they tested this. So they created a database of daily returns starting from 2015 when it was first financialized. In other words, available as an ETP, as I said, an exchange-traded product. We created a traditional balanced portfolio with 60% equities and 40% bonds, and then added a modest amount of Bitcoin, detracting from both equities and bonds equally. Despite Bitcoin's volatility, an allocation of 4% to the aforementioned portfolio improved annualized returns from 9.1 to 18.8%. I mean, that's doubling your returns. Annualized returns of 18% are just, or almost 90%, are just phenomenal. I think anyone would be happy with that. And it talks about the Sharpe ratio. So usually any Sharpe ratio above 1 is considered to have a positive impact on a portfolio. And here's the portfolio with 4% Bitcoin. You can see it's compared to 4% gold or 4% SOLC, which is basically a social network stocks, and a portfolio with 4% CRB, which I think is bonds primarily, or well, actually, let's not guess, let's read down here. So they put in gold. So this portfolio is with 4% gold due to Bitcoin being often likened to digital gold, but you can see Bitcoin does exceptionally better. So this is the benchmark, 9.1%. So all the portfolios actually did better than the benchmark. So even including gold is a good idea too, because you can see it did 9.3%. The SOCCL index is a social networking index, including companies such as Facebook and Google, as Bitcoin has been more closely correlated to this equity index than others in recent years. And so that's the 4% social network index. And that did even better than gold. And the max drawdown, of course, was higher than gold. And of course, max drawdown in Bitcoin portfolio was higher, but only by 1.5% or so. So nothing drastic. And then, of course, finally, the CRB index is a representative indicator of today's global commodity markets due to its similarities to commodities. So this is with 4% in commodities such as copper, iron ore, those kinds of things. And that did the worst, 8.7%, primarily because commodities have been under a lot of pressure lately. In fact, they're in a bit of a bear market, have been for some years. So there you have it. Correlation 84%. And here's the Sharpe ratio, 1.6%. 1.67, I should say, rather. It's not a percent. But you can see it's over 1. It's the only portfolio with a Sharpe ratio higher than 1. So Bitcoin, of course, you can see it's basically doubled the performance of any of the other portfolios with 4%. And honestly, 4% is a small weighting. I'm probably heading towards 10% roughly, and I wouldn't probably mind getting up to 20 to 25%, I think. Maybe more, we'll see. I'm just a huge fan of Bitcoin as I've become more and more involved in the space. I just see the greater potential. And here's the returns versus the maximum drawdown in the 60-40 balanced portfolio. This is the benchmark again. So looking at the same portfolios, and the max drawdown is the purple graph, as you can see here. So max drawdown is not exceptionally much higher in Bitcoin portfolio, but the returns in black bar here is substantially higher, it's double as we know. So there's also other interesting information in this article. If you want to read the whole thing, of course, links in the description. But there you have it. So 4% is, according to this particular data study set, I guess, is the ultimate amount of Bitcoin to have. Let's see if other studies agree. So here we have a new study from Yale, which suggests every portfolio should include 6% of Bitcoin at least. This guy peeking out the window looks like almost. I thought that was quite cute. I thought that was a little like Where's Waldo type of bit of fun, but obviously it's not. But there you have it. Now he's peeking out the window for sure. Okay, enough silliness. A new research paper published by an economics professor at Yale University recommends a portfolio with at least 6% in Bitcoin. And so, folks, none of this is financial advice, of course. I'm just giving you thoughts to think about, and hopefully you'll make your own decisions. But here we can see that 6% seems to be the sweet spot. So 4% in the first one, 6% here. But I think even 1% is probably going to be helpful. And the professor is L.A. Savinsky, I think, if that's how you pronounce his name. In any case, though, regardless of your position on the matter, Bitcoin should comprise a minimum of 1% of your portfolio just for diversification purposes. That's roughly what they're saying. Optimal construction of one's portfolio, the economist holds that Bitcoin should account for at least 6% of it. And those who are less enthusiastic should hold 4%, and everyone basically should have at least 1%. That's what the thrust of the article is here. Professor Dragan Boskovic from the Arizona State University, speaking on the matter of cryptocurrencies, he noted institutional investors are recognizing this new asset as a valued investment opportunity. This will encourage individual investors. It will also encourage consumers and small shops to start trading in cryptocurrency. So I tell you, when this really starts picking up, we have a couple of little sticking points here too, as I've mentioned before. You have to be somewhat technically savvy for you to figure out how to buy and use Bitcoin, because it's a bit of a different asset class, and a lot of these different wallets and applications are not as user-friendly as they could be. I envision a time when we will have, perhaps, hopefully, this is the goal, my dream, that we would have a wallet, if you will, an application on our phone or on desktop that is basically our own bank. So we could have let's say, an account with the Bank of America, just use an example that most people are familiar with. You have your account with Bank of America, and that account with Bank of America also holds, as you can have a checking account and perhaps a savings account associated to your main account. That account will also hold your cryptocurrencies, and you'll be able to swap between fiat and cryptocurrencies easily, pay with cryptocurrencies that be automatically perhaps exchanged on the fly to the fiat that you're using or that you need to use for the particular purpose. So I think all of these things need to come into alignment, make it a lot easier, a lot more seamless, and then we'll really see a big uptake. And of course, part of that will be having small shops, mom and pops, and other businesses offering payment in Bitcoin. So we're a little bit ways away from that, I think several years yet, but this is where the huge opportunities becoming. You're getting in early now, and that's where things will really start to take off for you, those of us in the space already. But that's not financial advice, it's just what I'm doing and how I'm thinking about this. The study was titled Risks and Returns of Cryptocurrencies, if you wanted to have a look at it earlier or sort of investigate that further. So there you go, anywhere from 1 to 6%, or at least 6% according to this one fella. And here we have one more article we'll look at. Bitcoin improves a portfolio's performance, a study finds. Just 1% held in cryptocurrencies was shown to boost annual returns by as much as 7.5% according to a 6-year study. So this is where we get the 1%. So even for those of us who are really risk averse, I think you could arguably convince most people that 1% of gold in a portfolio is probably not a bad idea. I mean, that's very little risk. And I think the same is here with Bitcoin, except the upside potential with Bitcoin is enormously more than gold, certainly in my opinion. The annual returns of indices with 5% held in cryptocurrencies reached double figures over a 6-year period. So, it seems 4, 5, 6% is what I'm hearing seems to be the sweet spot. Holding as little as 1% in cryptocurrency can boost returns across any portfolio type they talk about here. And here's a sort of small chart, a table, if you will. I've tried to make this as big as I can. We can make it a bit bigger, see if that helps. But it doesn't really help this chart. I don't know if that makes it any bigger. Doesn't look much bigger. But anyway, here we go. This is Table 9, the annualized returns from this joint venture between Cryptology Asset Group and I think Iconic Funds, another study done by them. So this is what they figured out. Here's the traditional stock bond portfolio 50-50 and a traditional stock bond portfolio 80-20. And in the earlier case, we saw a 60-40 bond portfolio. So this is the reference index. The one that did the best is the 80-20 stock bond portfolio. As you would imagine, stocks have historically outperformed bonds and most other asset classes, except for Bitcoin and cryptocurrencies, since they've been developed about 11 years ago. And here's the different, here's a balanced portfolio, here's a endowment model, pension fund model, and a family office model. And I don't know what the specifics of those are, but I'm sure you can investigate that further. Nevertheless, the best one is a traditional 80-20 stock bond portfolio. And here's with 1% rebalancing of Bitcoin. And of course, the rebalancing is that if Bitcoin becomes 2% of your portfolio, then you sell half to get it down to 1%, as we learned earlier. So as you can see here, it's 7.5%. I mean, it basically boosted the performance of all these portfolios, as you can see. 3% does even better, and then 5% is really the sweet spot. Here you can get up to almost 15% annualized, I think, over that 6 years, which is just phenomenal. And of course, if you do 6% of Bitcoin from the other study, you can do 18.8%, right? As we learned over here. Yeah, so this article here from CoinShares said that 4% of the portfolio turned it from 9.1% to 18.8%. So interesting, 60-40. So 4, 5, 6% seems to be that sweet spot. And here we have 5%, not quite getting up to that high, but of course they're doing slightly different modeling here. But still, I mean, I think anyone would be happy with, if you're doing 12, 13, 15% per annum, you're doing quite well. That's a good way of saving for your retirement. And of course, if you're older, perhaps a young baby boomer looking towards retirement, then perhaps 4% is that sweet spot, or maybe even go up to 6%. At least I'm just talking out loud, my thoughts, just thinking about what I might be willing to do. As you know, I'm probably over that at this point anyway. Many investors and institutions are skeptical of Bitcoin and crypto because of its widely publicized volatility, Iconic Holding CEO Patrick Lowry told Decrypt. We wanted to present objective information showcasing how, even despite its volatility, the risk-adjusted returns of various portfolio types to crypto assets was still significantly improved by even a 1% allocation to crypto over the observed period. And here you can see, so this is Norway 80-20 portfolio. So perhaps this other one here where 4% became 18.8%, perhaps this is a American-based portfolio. I'm not sure if it says here. It doesn't say which particular stocks or which equity markets. Maybe it's the MSCI World Total Return, I'm not sure. But anyway, so between, let's say 15 and 19%, arguably you should be able to achieve with a bit of Bitcoin in your portfolio, allegedly. So here's rebalanced at 5%. You can see it's done the best. Of course, the drawdowns are higher. This is a much steeper sort of a waterfall than this one here on the sort of the reference index. But of course, at that point, if you're up at 250% cumulative return, and they're only up at 130, 140, a bit of a dip down to 210 or so is not necessarily something I would be too worried about. The impact of including a crypto index with weights of 1%, 3%, or 5% was examined. Bitcoin, Ethereum, XRP, Litecoin, Tether, Bitcoin Cash, EOS, Binance Coin, Bitcoin SV, and Tezos were the cryptocurrencies used for the index. So that's interesting, because in this particular portfolio, they use just a Bitcoin, I believe. And so perhaps that's part of the reason as to why this portfolio did not perform as well. As we saw here, you get up to 15% on a 80-20 stock portfolio if you add 5% Bitcoin. And I'm not sure if you're taking away from the stock part or the bond part. I would think you're taking away from the bond part. So this portfolio then becomes probably an 80-15-5 portfolio, if you will. 80% stocks, 15% bonds, and then the 5% of Bitcoin. I think that's how it works, but don't quote me on that. The annual returns of indices with 5% held in cryptocurrencies reached double figures, with the highest at almost 15% for a balanced portfolio comprising stocks, bonds, real estate, gold, and commodities. Okay, so includes all of those things, I guess. There you have it, folks. Some interesting grist for the mill if you want to think about that. Of course, this is good news, but of course, Bitcoin is volatile, so it does have big ups and downs. It can drop 30, 40% or more, usually only at the peak of its height, which of a bull run, which we haven't reached yet, but we'll get there soon. The serious intellectuals in the space are suggesting that we could see six-figure Bitcoin by the end of next year. I'm sort of in that camp, so we will see. All right, let's take a look at the stock markets generally on Friday here as we close up the week. Okay, it's a bit of a mixed bag. Early days, hard to tell. We might end up a little bit flattish. NASDAQ down about 0.25%, Dow up about 0.1%, and S&P 500 basically flat. So we'll see what happens. As you know, I'm expecting a huge crash at some point, but I think that's going to be post-election, maybe early into next year once we really get a sense of the second wave. Potentially, who knows? I mean, nobody can read the future, but we have to try and make our best expectations, right, and guesses so that we can perhaps plan for the future. That's really all we're trying to do here. So there you have it. Let's take a look at gold. Okay, so nothing much to write home about gold, sort of still consolidating at around that 1900, 2000 mark. And I'm expecting from here that it will head upwards. This looks like it's becoming a bit of a wedge shape here, as you can see, or a triangle. And oftentimes that is indicates sort of some somewhat bullish outcome, but we'll see. Arguably could suggest, well, it's not really a flag, no, it's more of a triangle. Let's take a look at silver. Silver doing the same as we would expect. The two metals sort of go in unison, except silver is more volatile to the upside and downside. Currently still up 50% over the year. And of course, I'm sure Bitcoin has now outperformed it. So let's take a look at that. All right, and here we have Bitcoin a year to date. And you can see it's up 42%. Okay, so silver is still outperforming Bitcoin at the moment, year to date, which is interesting. So there you have it. But I mean, look at these numbers, 42%, 50, 55% on silver. I don't think you can be too upset about those numbers. And you can see here the RSI is heading down below 40, almost down below 30. So I'd consider this to be opportunities to be buying. So I'm certainly a buyer at these points. Definitely, I'm dollar cost averaging, as you know. Okay, on to the coin market cap. Okay, a little bit of a down day over the last 24 hours. Here we are down 1%. Market cap still around $340 billion, with Bitcoin actually under 200 billion. So, I mean, there's huge upside potential here, really. I think Bitcoin could easily go 10x just to become 1.8 or 2 trillion market cap. So we've got a long way to go. 5,902 coins for your purchase and pleasure. Just take a brief overview here. So yeah, a bit of red here on Ethereum and Bitcoin. Terrific buying opportunities, in my opinion. XRP as well, down. Chainlink, Bitcoin Cash, Polkadot, mostly red across the last 24 hours on most of these coins, as you can see. Litecoin, Cardano as well. Tron, Tezos down a bit, Stellar. I might put a little bit of money in some of these other alternative coins, $100 here or there, but as you know, 80-90% of my cryptocurrency money savings is going in directly into Bitcoin. Monero down as well, OKB. And there you have it, pretty much mostly down. NEO was up 7%. Yearn Finance 5%. That's an interesting coin to me. I don't quite understand it, but I wouldn't go near that. Well, I wouldn't go near any cryptocurrencies I don't really understand, but I do understand some of the ones here. So there you have it, folks. There's your top bunch of coins. Now into the online Oracle, the 8-ball economist, for today's most pressing question. So we're talking about Bitcoin as being part of a portfolio, even just 1%, and roughly about 4 to 6% seems to be the sweet spot. And so I wanted to see, and I think that's primarily because Bitcoin has been the best performing asset class since its inception, pretty much, I think, at least over longer periods of time. So my question for the online Oracle is, will Bitcoin continue to outperform other asset classes for the next 18 months? And I think it will. So let's see what the 8-ball economist has to say. You may rely on it, and that's pretty much how I feel. I think Bitcoin is going to continue to outperform every other asset class, probably for the decades to come. Honestly, I don't think there will ever be such an opportunity for the average Jane and John Doe to be able to see these kind of returns in any asset class in their lifetimes. At least that's how I feel. I think this is just sort of a golden opportunity. I sometimes wonder if Satoshi Nakamoto wasn't just some advanced alien being who came down here and figured he would offer us this gift, because nobody knows who he is, of course. Of course, that seems quite unlikely, but it's just, Bitcoin is just such a simple and yet extravagant idea at the same time. Really change and challenge really the social fabric and the whole way our economy and financial system is built. I just think it's a fantastic idea whose time has certainly come. There you have it, folks. Thanks so much for joining me. A little longer video, but I thought wanted to spend some time there looking at Bitcoin, because a lot of folks are scared of it. They think it's a scam still. I was talking to a couple of close friends, family members, and folks are having a hard time, I think, understanding it. But in time, as we go into this crisis unfolds and it continues, then the currencies, the fiat currencies, become devalued, and our purchasing power becomes diminished, and inflation starts to take hold. I think people will be jumping on the boat. So if you get in earlier, of course, the better. The early bird gets the worm, as they say. Thanks so much for joining me. I appreciate you. Appreciate your comments down below, how you're doing. I hope you're well, staying peaceful and safe, healthy, of course. And remember, above all else, Dom Spiro, Sparrow.